1. The field of accounting may be best defined as the a. art of interpreting, measuring, and describing economic activities. b. issuance of an independent opinion as to the fairness of a company's financial statements. c. preparation of financial statements for individuals and businesses. d. systematic recording of business monetary aspects into the correct books of accounts. The answer is a. art of interpreting, measuring, and describing economic activities. 2. Which of the following characteristics of accounting information does the objective of financial reporting omit? A. comparability. B. timeliness. C. relevance. D. understandability. The answer is B. timeliness. 3. The primary objective of financial reporting is to provide information. A. about a firm's economic resources and obligations. B. about a firm's financing and investing activities. C. concerning the changes in financial position resulting from income-producing efforts of an entity. D. useful in predicting future cash flow. The answer is D. useful in predicting future cash flow. 4. The accounting information is used by A. all of these. B. businesses. C. government and government agencies. D. household members. The answer is A. all of these. 5. Generally accepted accounting principles. A. apply to corporations, but not to businesses organized by sole proprietorships and partnerships. B. are the ground rules followed in preparing financial statements. C. are the rules followed in recording financial transactions in books of accounts. D. assure the management that the entire business operates according to plan. The answer is B. are the ground rules followed in preparing financial statements. 6. The main purpose of accounting standards is to A. prevent unqualified accountants from preparing company accounts. B. provide useful information for shareholders. C. reduce the range and variety of financial accounting practices. D. set out uniform accounting bases. The answer is C. reduce the range and variety of financial accounting practices. 7. Which of the concepts or principles is not mentioned in IAS 1, Presentation of Financial Statements? A. accruals. B. going concern. C. prudence. D. separate valuation. The answer is C. prudence. 8. Which of the following concepts is not mentioned in IAS 1? A. accruals. B. going concern. C. materiality. D. prudence. The answer is D. prudence. 9. What are the four fundamental accounting concepts according to IAS 1? A. accruals, consistency, going concern, and materiality. B. accruals, consistency, going concern, and prudence. C. comparability, going concern, matching and prudence. D. comparability, matching, prudence, and true and fair view. The answer is A. accruals, consistency, going concern, and materiality. 10. IAS 1, Presentation of Financial Statements, lists four accounting principles. Which of the following is stated by the standard to be a desirable principle? A. accruals. B. consistency. C. going concern. D. historical cost. The answer is B. consistency.